Okay, Urmil Shah and Trip Chaudhary, they both are ready. And Urmil, even you are scanning through the press release, so are we. What have you managed to identify so far? What is the standout feature?
The standout feature right now is, as you said, on the capital deployment strategy. We were expecting that, sometime in FY18 they would announce a buyback, and what they have clearly stated out as utilizing $2 billion. It's slightly lower than what we were expecting, because it includes, I guess, a dividend and buyback both. That is the key highlight which we have come across till now.
Key number that we need to focus in on, the guidance, which has been poor, I can safely say that. They see the revenue growth of 6.5 to 8.5% in constant currency terms. Now, even though the ETNA estimates were most conservative on the street, we were working with a range of 7 to 9%. 6.5 to 8.5% has definitely been lower as a needle as to what the street was expecting. Trip Chaudhary, your first comments on the revenue guidance, constant currency basis, 6.5 to 8.5%, and the buyback quantum. Now, what they're saying is it's going to be a dividend as well as a share buyback. Not many details on the pricing, etc.
See, I can tell you, as I've been saying before, the IT sector is under severe challenges, and I think it's going to get much worse before the things get improved. Now, if you think about dividends and share buyback, it is sugarcoating. They're trying to sugarcoat even more value that is going to come over the next 6 to 8 months. I don't think why investors should be cheering about this. I think let the stock take a hit. Let the stock go to $8, $9. Let it really tank. Because share buybacks will be beneficial if the company buys its shares at its bottom. It is total stupidity if the company buys its shares at $15, because in 6 to 8 months, the stock is going to go to $10. It is better for them to postpone share buybacks till the stock takes the hit, because the fundamentals of the company and the industry is going to get much worse before it improves.
To quickly run you through all the numbers that we have at this point. First, on the guidance, 6.5 to 8.5% in constant currency terms, the revenue growth guidance. They see the operating margin at 23 to 25%. They've identified that $2 billion is going to be paid to shareholders in FY18, but they've not announced the quantum or the pricing. They're saying it's going to be via dividend as well as share buyback. And I think Trip, rightly hit the nail on the head, calling it really sugar coating, because the numbers haven't been all that great. The FY17 revenue cross has been $10 billion. The operating margins for FY17, they stand at 24.7% versus 25%. Pankaj, what is your take? Is this a massive thumbs down coming in on NIFTY, and are we likely to see that drubbing come in on the stock price today as well?
See, in the beginning, I would expect that the stock should be down at least 4 to 5%. This 6.5 to 8.5% guidance, considering the recent history which has been checkered on guidance versus delivery, I don't think it looks great. And if in this year they miss 1 or 2 quarters on even this guidance, which is on the lower side, that is going to be very, very bad. But 6.5 to 8.5%, apart from everything else, I think this is the most important number investors should be looking at, and that doesn't look great. I think that 4 to 5% kind of correction in the beginning in the market is not very unlikely in Infosys. So
I want to discuss both the ends of the range, and for a minute I was hoping to hear something concrete on the buyback, that they would come out with a buyback band, or they would come out with something that's not there. Sunita, at 6.5%, they are much lower than Cognizant. At 8.5%, we don't have the NASSCOM numbers, but if I use the previous numbers for NASSCOM for benchmarking purposes, they are marginally in and around the industry average. So this is not the Infosys which you and me have reported for years now. The Infosys which we've reported is a company which grows and grows and grows at a run rate higher than the industry average.
Absolutely, but you also have to look at the background that last year the company had to revise their guidance 3 times, and there bound to be some kind of conservatism as far as this time guidance is given. Remember, there were also reports that the company might just discontinue giving guidance. At least they've given out guidance to 6.5% to 8.5%. That's more or less in line with the expectation. Analysts were expecting 7 to 9%, marginally lower. analysts were expecting 6 to 8%. So I would say that 6.5, 8.5 is a tad below street expectation. But what is more worrying is the guidance they've given out as far as margins is concerned. They've lowered the band, the guided band, which is currently at 24 to 26% to 23 to 25%. So clearly they are saying that there is a downside more than from below 24%. That's what they're expecting as far as margin pressures are concerned. That's likely to be there in FY18. And having said that, yes, there are a lot of challenges. Macro environment is not very conducive for Infosys right now. But having said that, the margin decline will be seen very negatively. Other than that, the buyback announcement, although the company had not informed exchanges, so there was unlikely that they would have given a buyback pricing at this moment, but they have clearly gone ahead and said that they will be giving out $2 billion worth of money to shareholders, either in a form of dividends or share buyback. And they're also increasing the payout, which was earlier at 50% to 70%. So clearly the capital allocation policy, which most investors were waiting to improve going forward, has improved in this quarter, and they are announcing that they will increase it to 70%. So that should be taken positively. But I think for me the negative point is the margin range given out for FY18 is 23 to 25%.
Mayank Babla, good morning to you. How do you see the stock reacting today?
Hi, good morning. Actually, the stock reaction, I believe it will be quite negative, basically because of two fronts. Largely because the guidance has been downgraded now for the third time, I believe third or fourth time, to 6.5 to 8.5%. And even the downgrade in the EBIT margins that the company has given, that's around 23 to 25% from a previous figure of 24 to 25%. So that is just displaying the kind of stress that the whole industry and the company specifically is facing in the sector. And that I believe is a very huge negative for the company.
Okay. Himang Jani, Infosys in last 1 week has taken a knock of 4%. In all probability, it will fall another 2-3% today. Will you be a buyer if the stock falls another 4% today? Himang?
Yes, Nikunj, I think if the correction is, let's say, about 4 to 5%, then definitely it would make sense to buy, because definitely there is a bit of a disappointment both in the guidance and the margin front, but there is going to be some amount of stability because of the buyback and the dividend announcement which is going to be there. And I think at current price for Infosys would be trading at about 13 times FY18 earnings. So with a 4 to 5% kind of a cut, you will be able to buy Infosys somewhere around about 12 times. So I think for somebody who has a longer term view, buying a 4 to 5% lower from the current price point would definitely make sense. I think you can expect a 12-15% kind of a return over a 1 year period, given the buyback and the overall stability which the company is able to give.
Trip Chaudhary, it's a massive thumbs down from you. Okay, we'll get back to Trip in just a bit. Sarabjit, what's your sense on, how the street is likely to absorb the numbers? Because the guidance has been extremely poor. Is the scope for disappointment massive when the stock opens for trade today?
The range that I think the street was working with was somewhere on 7 to 9. So what they have given is 6.5 to 8.5. So I don't think the actually disappointment is that great, because actually when the street said 7 to 9, what they meant was that the last year has been bad, so you have a base, so probably they expected that they will beat the expectations. So I think that the disappointment will come from the fact that the street was working with a conservative guidance expecting, and it's come closer to what they were expecting, I would say. So a disappointment is that they haven't beaten them in terms of what the street was expecting. And secondly, I need to understand the premises on which this guidance has been given before I can make out a call as to how the stock will react, because prima facie what they have said is in line with whatever street has said. So I don't think there should be a bigger disappointment. In terms of margins also, they have mentioned around 23 to 25. 25 has been around the upper band of their normal expected margins. So I guess to that extent, I believe that again I need to understand what are the premises for that range to be given. And obviously the sweetener which has come in terms of buyback, which even TCS has announced, and now Infosys is increasing the payout, which is a demand which shareholder had for a long time for our IT companies, is to pay out the shares in case they're not utilizing it. So in totality, I think actually the disappointment is more to do with what is probably will come in after the management has spoken as to the assumptions they have put in for such numbers to be given to be more or less in line with what the street were expecting, a conservative kind of a guidance coming in. Is it just because of the fear in the macro which even street has, or it has an underlying long-term significance? So I guess that is the difference the stock will need to understand before it reacts, and probably that will be more determinant of the stock movement rather than what has come in. What has come in is more or less in line with a sweetener of buyback and a dividend. So I guess
the point, Sarabjit, Vishal Sikka in his commentary is not sounding too hopeful of the future outlook as well. In fact, it pretty much mirrors what he said last quarter around as well. He's saying, looking ahead, it is imperative that we increase our resilience to the dynamics of our environment, and we remain resolute in executing our strategy, our part to transform Infosys and to drive long-term value for all stakeholders. So, I mean, going by this statement, you really can't tell whether he's hopeful or he is not hopeful of what the future may actually throw up. Having said that, talking about what went wrong in the quarter gone by, he's saying unanticipated execution challenges and distractions in a seasonally soft quarter affected our overall performance. He's saying at the same time we continue to see many positive signs of our strategy execution, and he's talked about what really showed momentum for them. But yeah, going forward, Pankaj, it's not a very bullish sounding management, and more importantly, he's not really giving you a clear direction, because he himself is saying that things are looking very hazy. He himself can't figure which way things are going to pan out.
Yeah, so I think this is a very, very disappointing commentary, because if you see that what he's saying, that I'll do my best, Infi will do its best, but the external environment is very, very challenging. It's very, very clear that no management and no company would ever say that they will not do their best, and that is the only positive in this commentary. Apart from it, there is nothing which is very, very encouraging in the commentary, and as people might be able to figure out that not just
Ravi Venkatesh is the co-chairman. Now this again brings back to that broader point of what is happening between the promoters and the founders. Pardon me, Pankaj, I have to interrupt you there, because we just noticed this news flash. My understanding is that Ravi Venkatesh being a co-chairman, which means that you are creating two parallel chairmen now, Shesha Sai and Ravi Venkatesh, two parallel chairmen. This is again an extension of the war between the promoters, compensation package, Narayan Murthy's comments on what the corporate governance standards are. Sunita, Ravi Venkatesh as the co-chairman. This, I think, for the first time it's happened in the history of Infosys, Sunita, that they have a co-chairman now.
Absolutely, this is the first time they have a co-chairman, and you hit the nail on the head when you said that there were issues more with the chairman and the founders rather than Vishal Sikka, although there were facts picked up in the strategy of Vishal Sikka, but it was clearly the spat is between chairman and the founders, and the appointment of co-chairman is clearly points out that they were looking at dividing the responsibility or giving more teeth to co-chairman and reducing powers of the chairman, and that's exactly how it seems to be have played out. And Ravi Venkatesh seems to be a person that founders will find trust with, and this may also be a way of bridging the gap that's built up between the founders and the management. So probably appointment of Ravi Venkatesh can resolve this issue that we have been seeing that coming up. We saw two spats openly coming in about with the founders and management, and this seems to be a midway or a kind of a truce that they have worked out.
Sunita, what really amazes me is that the last thing Infosys board should pay attention to is that, whether they have a co-chairman or whether they have a independent authority. I mean, the problem right now is the environment, the problem is business, the problem are margins and what's going to happen to the currency market and impact of that.
And on top of that, Infi has to deal with what the founders' whims and fancies are. And in this case, it's clearly evident that Narayan Murthy got his way out. He's managed to get a second co-chairman on the board. So
yeah,
he's managed to wriggle his way out. The second time that he threw the tantrum, it's gotten absorbed.
So whether it is an indication that, the board needs to check on the compensation package, they need to get better, governance and monitoring systems in place, or it is another way of saying that Ashok, with Mr. Seshasai, he's not been able to run the, board efficiently, whatever may be the messaging here, but the fact that there's a co-chairman in place, from corporate development, that is important. From market development, that's not important. From market development, what is important is Vishal Sikka's commentary. There is a lot of caution in it. I mean, take his commentary in 2014 and map it up with what it is right now. He's sounding very, very cagey on all accounts. The guidance, you can attribute the guidance, or you can attribute the margin picture to what's happening to the currency picture. So you can be charitable there. But buyback and increased dividend payout, which means there is going to be a back support for the stock. Well, we are discussing only bad news. For a change, let's look at the good news, and the good news here is that the capital allocation will change. A buyback is coming. More dividend means that the way markets value stock price, which is based on dividend and cash flows, that also will change.
Yeah, so both the higher payout and buyback or the capital deployment is the only positive which even we could gauge from the press release which is out. Otherwise, this quarter the growth is slightly lower than our expectation, and clearly the outlook is muted than what we were also expecting. So yes, capital deployment strategy is the only positive to take from it.
Sarabjit, the cat is out of the bag. All the negatives are now known. There's a co-chair, so you've got some clarity on which way this entire battle between the founders and the board is headed. Clearly, the founders have, a way into and a say into what the board composition is going to be like, and God knows what's going to happen now, whether Mr. Seshasai is going to stick by with his position or not. More importantly, just going by earnings as well now, it's been a disappointing quarter. The commentary from the management, from Vishal Sikka, hasn't been the most positive. It clearly smells and sniffs of pure caution, and he himself seems a little unclear on what the trajectory is going forward. Do you sense that there is going to be a fair amount of downgrade on the stock, irrespective of the knee-jerk reaction that we may see in just minutes from now? After that, do you see a lot of price target cuts as well coming in on Infi? Or do you think now the negatives are all known and that dip could perhaps eventually in a day or two be bought into?
See, as I said, the street is already working with 7 to 9 kind of constant currency growth. So I guess the major disappointment probably, or the tweaking that would probably happen, will be on the margin front, which they have guided for 23 to 25, and that could be lead to some kind of a earning downgrade happening. And that could obviously lead to some kind of downgrade in terms of target prices. As far as multiples are concerned, I doubt that they will get derated that significantly. As we already know, the IT sector and Infosys itself is trading at pretty FY 17. It's trading at somewhere around 15 times, and probably 18 also, somewhere around 14 plus times numbers, which will probably after downgrade come to somewhere around 15, 16 times. So I guess in terms of multiples, there shouldn't be much downgrades happening. But yeah, earnings would see some cutoff happening, mainly because of margin front more so rather than revenue part of it. So I guess margin is something which street would be again going back and working on rather than revenue, which, as I earlier said, we were already working with 7 to 9. So I guess it's tweaking which will happen on the margin front, not on the revenue part, which will lead to some downgrade on our earnings numbers.
And then let's see how markets react, or how Infosys stocks react. There is a buyback coming, but we don't know when, and we don't know the quantum. However, we know the absolute size. That's about 20-25% of the total net worth. That's a backstop for Infosys. But operationally, you cannot say very good things for Infosys. The stock may do different things. That's a function of positioning, and that's a function of how the stock has reacted. 5% is what the stock has lost in prior 1 week. 6 rupees is what the stock has gained. This is technicals, FNO, all kind of other factors which are at play. There is nothing in the fine print which convinces me that the stock should run up by 2-3%. I mean, frankly, it's bizarre the way markets are moving, and this is the way how the stock is moving. But apart from Infosys, what is happening to the rest of the market? Got to address that. Infosys is important. It's a headline for us, but that's not the only game in the town. Even though Infosys is up, Sensex is flat, Nifty is down by about 5 points. So it's a flat start with a downward bias for benchmark indices. Let's go back to Infosys once again. I mean, I'm just trying to see when will markets really align, and 8% off. So now that gap up start what we saw in the first print, that gap up start now seems to be getting marginalized. 796 rupees for Infosys, 585. 10 points off for Nifty, 16 points off for the Sensex. Aisha, what about the non-Nifty side of the market?
Well, the non-Nifty side of the market has started off absolutely quiet. So, this is something we're sort of getting used to. It's only the due course of the day that's going to tell us which way the markets are headed. But an absolutely flat start for both the mid and the small cap indexes. Sun Pharma, though, that continues to be in pole position, as was the case yesterday. And I think now in fee, that pop that you start off with, that's finally settling down. The stock is completely eased out from that initial pop that you saw of about 2% Infy is now just barely latching on to the green. But moving away from Infy, you've got Sun Pharma, you've got Lupin, you've got Dr. Reddy's, Aurobindo Pharma. So sectorally, if I have to draw out a winner, that's definitely the pharmaceutical space, as was the case in trade yesterday as well. What's happening then with some of the mid caps? And let's check in on what the Adani twins are up to, considering the massive correction that we've seen ever since the Supreme Court verdict on the regulatory tariffs. And this is one space which has gotten completely blown out. Adani Ports, Adani Enterprises, Adani Power, all these stocks are getting hammered on a daily basis almost. Then the mid-cap end of the market, let's just check in on some of those names as well. So talk about the gainers, and you've got few tracks of green coming in for Bharat Financial. Glenmark is holding out okay. PFC and REC, they continue to be big winners. It's no different today too. They're winners today as well. You've got some moves coming in on an Alembic, a South Indian bank. DLF has started off quiet. Ashok Leyland is looking okay. Bharat Financial, that's the key winner, I would say. So again, no big bang moves. It's largely a quietish start. What's getting pounded, of course, is the Adani names. But besides that, for the index, it's an absolutely flat start. Let's just revisit if we can pull up the tick by tick chart for Infosys or not, because that initial pop has completely gotten reversed now. We're down 1.5% on Infy. So from that initial pop, it's quite a bit of reversal that you've seen in the stock price, and now the rates are looking believable. It's a downtick, as it should be, because the numbers have been disappointing.
Yeah, I mean, this is the logical reaction. That what we saw was a silly reaction, and maybe a reaction based on technicals, not based on absolute fundamental news. Now, there are two things which we want to identify again, and why the stock is down despite a 5% runoff, despite a 5% cut in last 1 week. Number one, it is the trader community was expecting that the buyback price would be announced. So that's not coming. So that, in a sense, is a missing link, or a assumption went wrong. Let me put it this way. B, the management guidance is not very powerful. It's much lower than Accenture. It's much lower than Cognizant. And in markets, you always do these. You look at the absolute picture, but you always do the relative comparisons. And on a relative basis, Infosys is losing out. These are two things which really matter if you want to map the stock, today and tomorrow. Of course, there would be a price point, which is a judgment call as to when Infosys becomes a, value buy, because now you have to be a contra buyer when it comes to Infosys. Third, what could be disturbing the market is the fact that really, there's a co-chairman. What does that mean? Why are founders, that clearly means that the founders have a very large role on the board, and they have a say in the way how Infosys would be run, which is not great, because Infosys always has got this great vote of confidence for being independent and for having a very well managed board. So is there an issue with the board and the policies the board is following? Will the composition of the board change? These are a lot of unanswered questions which will now start puzzling a lot of long-term investors. The premium which Infosys had enjoyed because of positioning of its board, that premium is getting diluted, and when that premium gets diluted, it will have an impact on the way how stock markets would value the stock. Pankaj, you have the right to disagree with me completely.
No, I think this is the most important thing, because when you have just too many people in the leadership position, that creates more issues than the synergies which you would be expecting. So having two chairmen, it probably means that even in back of his mind, Mr. Sikka would not be very sure that how long this situation would continue on, or whether he would have the right, the free hand to change and to steer Infosys, and that's something which is very bad. This is not a great time for IT industry, and when the times are good, probably you can manage with these sort of internal issues, but this is not the time. Infosys is really going to struggle with this kind of transition. Probably if you're not happy, even the founders or promoters is probably good to fire the current chairman and bring somebody back. That's perfectly fine, but having two co-chairmen and not having confidence in the current management team, that is something which is very bad in my view.
Okay.
It's interesting, Nikunj, I'm sorry to interrupt you there. We've got a couple of brokerages coming out with their first stakes, and it's very interesting to see as to how they're all calling it that overall the numbers are slightly weaker than expected, but partly priced in. So maybe that's why you're not seeing such a sharp reaction in Infosys. And I'm just going to quickly highlight one of the brokerage opinion that we're getting in. The quick summary is saying that the overall the numbers are slightly below expectations on the fourth quarter revenue. The FY18 guidance is slightly below the view, but dividend and share buyback plan is positive. They recall the stock is partly priced in these issues, having corrected about 5% this month already on a strengthening USD INR quotient, and fears of worse than expected outcomes on guidance and buyback plans are already in the price. Sarabjit, do you sense that largely the negatives are already in the price, considering the stock is already lost 5% this month?
That's what I said earlier on also, that, even if I price in probably a downgrade in earnings in FY18 because of margin pressures to some extent, probably the stock is trading around 15 times FY18 numbers, which I don't think, given the business ROEs that the company enjoys, and given the backdrop that they have decided to increase the payout so that shareholders, as it is, Infosys dividend yield in current prices was 3%, which factored in 50% payout ratio, 40%. So if the payout ratios have to be increased to 70% and increase going forward, then I guess definitely dividend yield will increase, and valuations at around 15 times for the kind of business ROE that IT companies are generating, it's not very demanding, given that we obviously near-term concerns are there, but if a long-term shareholder has to think from a long-term perspective, I don't think there should be a very sharp dip happening, and that's a consensus that I think probably will emerge on the stock also. We shouldn't expect a major dip happening in the stock. Given, as I earlier also pointed out, it's more or less marginally below what the street was expecting. So I think that kind of a dip will happen, and the stock will again regain its strength going forward. And probably we'll look into quarterly numbers and how they pan out, and probably that's the way the stock will be. But I don't see a sharp dip happening.
So at 9:55, Sarabjit, you're saying that the stock is a buy?
Yeah, we have a buy recommendation on the stock.
Aisha, the way I look at Infosys is that there would be a price point beyond which you will have to buy Infosys. But Infosys is one stock which is largely over-owned by institutional investors. So at a time when IT sector is struggling and you've got other sectors which give you a better promise, whether it's cyclical, whether it's auto, consumer names, do you want to buy IT when the environment is struggling? That's one.
Exactly.
B, what was Infosys? I mean, Infosys after Vishal Sikka was this hope trade where Vishal Sikka will have a magic wand and he will be able to turn it around. And the stock has traded at a premium despite averages which were much lower than the industry average. When Vishal Sikka took over, he comes out after 6 months or 8 months into his tenure, and he gives this very big vision statement for 2020, which at that point in time looked very difficult. But knowing Infosys track record, markets thought that he will be able to achieve that. So that vision 2020 statement, which he talked about growing at a run rate higher than the industry average, I will be this size company in terms of revenue target. All that is getting dismissed. So the Vishal Sikka premium now from Infosys has to come out. I buy Sarabjit's argument that look, stocks will not go down to zero. Infosys has a value. It has cash on the balance sheet. Return ratios are there. But is there a mad rush to buy Infosys by institutional investors? That's where I have my reservations, because most of the good guys already are overweight on IT, are overweight on Infosys. I mean, you may be underweight IT, but within IT, you have to buy Infosys. I mean, nobody's going to buy Wipro. HCL Tech, still yes. TCS has migration issues because of, Rajesh and Chandra. So your default choice is Infosys. There you are riding it because of Vishal Sikka and because of corporate governance. And that's where you could ask yourself a question. I mean, Vishal Sikka so far has not managed to do anything which is extraordinary. Let me put it this way.
Yeah, and of course the other niggling factor, Pankaj, continues to be what's happening between the promoters as well as the board right now. The fact that there's already a co-chairman along with Mr. Sesha Sai is a telling point in itself. Do you